Okay, well, hello everyone. Welcome to our cutting edge trading room. And today's class, we're going to just review some pairs. You already have some pairs that you guys want me to look at. I will come back to those. But we're going to start off by looking at gold. Okay, so what we're going to do is I'm just going to delete everything here. What we're going to do is we are actually going to basically take a top-down analysis, right? A bird's eye view of the pair. Okay, so I'm already on gold. So GBPCAD, EURGBP, we'll look at those two as well. Okay, so this is the weekly chart for gold. So what I want you to see is this market is bullish, right? How, the market is bullish, and we know that because we can see clearly how the market has been moving. Now, if you go even further, let's look at the monthly chart here. You'd see, so let me do this. Where's my pen? Yeah. Okay, so you'd see that price, broke highs, made a, so this was a low. So from here, I'm going back as far as 2015. I don't need to. It was not necessary. I don't think we even need to do that. But you can see, basically, lower lows broke high. So made a higher high, make a higher low, and then broke high here. So this is where the high was broken, made a higher high, so higher low. So on the monthly time frame, we're coming from this range, right? On the monthly time frame, we're coming from basically this low, right? So this low here to this high is the range in a very predominant bullish market. So what we're looking for, so what we want to see, here's one thing I like to see. On the higher time frame, let's say the market is bullish, right? I want to look for buying opportunity. However, let's say this now is the higher time frame, right? Let me move it to the side. Let's say this is the higher time frame. Now, on the lower time frame, price might be, price might be this area where price is coming down. On the lower time frame, might look something like this where price is bearish. Now, this one here could be, let's say, the weekly chart, right? And then this here could be, let's say, the 4-hour charts, right? So we have the weekly charts bullish. Remember, we know that the overall structure is the higher time frame is the king, right? Now, on the 4-hour chart, you might have something like this. Now, if we break bullish on the 4-hour chart, note that we're not bullish on the weekly chart. The weekly chart will still be something like here. But let's say I'm interested. Let's say we start seeing that bullish break from an area I'm interested in. Then I might even go down to, let's say, a 15-minute chart or a 1-hour chart, and then look for confirmation. So I want everything to align. So let's say let's say the market is bullish on the higher time frame. I want to see the lower time frame from which I get involved in the market begin to break bullish too as well. So we're now having the higher time frame align with the lower time frame, and then I'm looking to get involved in the trade. Now you can apply this concept in every single move. Let's say you're looking at the 4-hour chart, and then you're confirming that with the 5-minute or 15-minute trend, but you want to have an idea as to where you want to trade towards and why. So we're coming from this low to this high. This is the weekly chart, so this is a lot. That means as long as price is within this range, what is my expectation? Well, you can obviously come back here in a couple of weeks or years' time. My expectation is that price is going to come and close above this high. Right now, all of these touches here are not it. Just so here is the thing. So this here is what I will refer to as target liquidity, right? And down here is what I'll refer to as my protected low, right? So that would be my target liquidity, and this would be my protected low. Now, what this means is within, as far as, price can do anything it wants to do within here, it doesn't really matter. It's either price close above here, in which case, my protected low would move up, and then we'll start looking for another target liquidity, or price comes down and break below this low, in which case we become very bearish, right? Now, but note, this is the weekly time frame. We're not trading the weekly time frame per se, but so what do we do, right? How do we flow with that? So let's see, we move down further. So it is even the monthly chart. So we don't need to go down to the weekly time frame because we'll still see the same thing. So let me see, just give me a minute. My chart alarm is going up. Where are you? Let's just delete this for now. Okay, so prices is moving where I want them to move. Okay, so now or looking at the daily charts, right? So what do we see on the daily charts? Now, remember, this liquidity target is the monthly target. So what I'll do is, let me go back to the monthly, right? And I'm just going to make this, unavailable, sorry. Just hide this for now. Let's make it only visible on the monthly. Okay, so if we go to the weekly time frame here, what do we see? Well, the market is still bullish. So it's bullish on the monthly, it's bullish on the weekly. How are we looking at that? So we have basically just looking from left to right, higher high, higher low. We broke here. So we have a new higher high that came from this low, and then we broke again. So we have this high that came from this low, and then we have this high. Let me zoom in a little bit. Yeah, that came from this low, and then we have this high. So we're from on the weekly time frame, we're moving. This was the, so let me just delete all of this. I've gotten the information I need. Okay, so on the weekly time frame, this is the low that formed this high, right? Now, so what that means is, ideally, this would be the target, right? That will be the target liquidity. And here would be what is supposed to be the protected low. Okay. Okay, so now it's one of two things. Either price comes and take out this high, or price breaks down this low. So in this particular instance, price breaks down here. So what then this means is, so we've shifted from, at least within this, we shifted from this bullish to being bearish at this break. However, the way based on the way I look at the market, where did this break come from? I know this is the high, the overall high, right? But this break came from this last up move here, right? So we have this up push here, and then this would now become the protected high. So here should be the protected high, meaning if the market really wants to stay bearish, it should not close above that high, right? Okay. So that should be the protected high. So what it means is, at this point where price began to push up, right, where price began to come up, what you'd expect, especially from here, is for price to come down and clear this liquidity. However, remember that our monthly time frame was still bullish, right? But the moment price breaks above this high, what does it say? Well, it means this is now our new low, and this is our new liquidity target. I don't know if you're getting it. Okay, so let me see if I can replay this. Okay, so let's just take this like this. Right? Now, at this point, we've cleared this low. What would I now was saying that the market is bearish, right? However, for it to stay bearish, it doesn't need to close above this high, right? The moment price closes, so what you expect now, so let's say this was a trade plan, we're looking to trade this, it will be something like this. We enter from here, our stop loss would be above here. Now, remember, I wouldn't do anything like this nature because this is a weekly time frame, right? I'll be looking for confirmation to sell and take price lower. However, price did not confirm, and let's see, price broke above. So the moment we had this, okay, not here, the moment we had, now there might be confirmation within here, you might look to get some trade, you might even make some profit on those trades, because remember, this is a weekly time frame. On the 1 hour chart or the 15-minute chart, there might be some very nice trades set up there, right? Now, the moment price breaks and closes above that protected high, let's see. Yeah, okay, so let me just play price. So there, the moment we had this break here, right? I'm just going to delete this one, right? At this point where we had the candle close above this high, what this means is this is no longer a this protected high failed to hold. If anything, it means this would now be the protected low. Now, but here is where context comes into place, and context can be very, very powerful. And what I mean by that is, over the higher time frame, at least this is the weekly time frame, but the monthly time frame has been very, very bullish. And now you can see that on the weekly time frame, price broke bearish, right? It broke bearish and then broke back bullish. So you're seeing that we're now breaking bullish, aligning back with the higher time frame. So now this is what I want to see for price to continue to hold this price upwards. So, you know, for instance, I will be more interested in buying this market after this break has happened than I would be in selling this market. What I would like to see instead was if price breaks down, then I'll be interested in selling, right? So basically, we're looking at context, right? From this standpoint. Okay, so now price continues to move. Now remember that we had this high, so we'll have our break of structure here, right? So we had our break of structure there, and this now becomes our protected low. And then what we want to see is for price to, we want to see price pull back. And because now we're looking to target the highs. Okay, so let's continue to play price. Price is still making higher highs, and we're still making higher highs, and we're still making higher highs, and now we're pulling back. Okay, so at this point, well, I asked myself, where did this move come from? This is the overall down move, right? That caused this break of structure. However, the actual low, in my opinion, would now be this one, right? Because this is the last structural low, right, in this market. And now, essentially, as prices within this area, right, within this area, all I'm looking for is either for price to either pull back to an SND area or begin to break higher. Do you understand? So I'm looking for confirmation to continue to break higher, or for price to pull back down and give me that confirmation to continue to break higher. Now, in terms of SND, supply and demand areas or zones, certain areas I might be interested in looking at based on, at least, remember, this is the weekly time frame, but we're still using the same idea. So I like this one. I'll probably keep this one here in mind. And definitely what happens is if price comes into this area, I will be interested in looking for buy opportunity. Now, there's no guarantee that price has to come into that area. So what that means is even on the smaller time frame, remember this move, this big bearish move here would look like this: lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, on let's say a 1 hour chart. If we begin to break high, you see that we're now breaking structure. Then I could now begin to follow the buys or the longs higher, even though price does not come down to any of this area. So it's one of two things: is either price comes to an area I'm interested in and gives me confirmation, or price begins to break structure in the direction that I want to see it go. Okay, I hope you guys are following. Okay, so now we let's continue to play price. Price is still doing what it's doing. It comes into the area. So now at this point, let's say I go up to the daily charts, right? I'm looking at the daily charts and I want to see structural shift. Now, on this particular, this is not my paid, what do you call it? Trading view accounts. I probably should have switched that. I can't go lower on the replay mode, but I'll just try and work with this. Okay, so what I want to see now is confirmation to buy. Now, remember, I want to either buy from here or buy from here. Now, confirmation is all dependent on you. Some of you would use candlestick setups. Some of you would use maybe counter trend line break, or you could use internal structure. Let's say on the smaller time frame, on the 4 hour chart, you want to see structural shifts within this area. Now, you see how price got to an area we're interested in. I want to, depending on what let's say you trade a pin bar. Let's say you trade pin bar or stuff like that. In this particular instance, there was a pin bar here. So let's say at this point, you took a trade, okay, to be a buy. Let's say daily chart is your confirmation, is the time frame you're confirming on. Remember, the concept I'm teaching you here does not apply to, it's not about this time frame or anything. It works on every single time frame. Now, in this particular instance, well, you took a loss, right? So you stop loss below the low. Now, this is not exactly how I trade in terms of confirmation, right? But let's assume we're using candlestick setup. Okay, so this was a loss, but price is still within the range or the area we're interested in, and that we're still waiting for confirmation. Again, what do we see? Price gives us another bullish setup, bullish pin bar. Here we take the trade, stop loss below the low, and we're still going after this high. Now, this particular trade now is moving. It's moving, and obviously you want to take partial. So if I was taking this trade in this way, I probably want to take partial profits here. Probably close partials here. and just manage my profit along the way. Okay, so we had a -1 here, so we made a loss, made a -1 here, and our price is moving our way. So let's see, does price continue? Remember, okay, I wanted to say something. Remember, if price breaks down and comes down here, I will still be interested in buying, because it's from an area I'm interested in. But in this particular case, unfortunately, it didn't hit our stop loss. And so we move, and let's see. So at this point, I'd have taken my first partial, waiting to take my second partial, and let's see if we get that. And price obviously breaks the high. So we remember, we came from here. This was our protected low, so price held up that protected low, and price is moving higher. So this would now be what I look as my this would have been our liquidity target. This is the reason why we're targeting that high. Okay, and we made what, 1:5 RR on this one, and this could be much better, because if I refine this on a smaller time frame, my entry would have looked something very similar to maybe I would have ended up getting involved here, but in such a way that, the funny part is I can make somebody might take this trade and make 1:5 R, or let's just call it 1:6 return on investment. Okay, so risk to reward. However, in just this candle, in just this big green candle here, I can make 1:20 because of how I get involved in the trade. Right, so it's all context based. But here we made trade, the market went our way. Now, if I ask you, would I be interested in buying if price came back here, this low here? Let me see your answers. If price were to come back down here now, would I be interested in buying? Quickly, what's your response? If price were to come back down here, would I be interested in buying? Are we together? Okay, so Colin said yes. Any other person? Would I be interested in buying? Said yes. Chinedu says yes. Who again? Okay, so we have 2 yeses. Well, you're very, 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 very wrong. Well, here's the reason. Remember, it's all context based, right? It's all context based, right? Let me delete this for a moment. Let's take this one out, clear this, right? Now, if I go back to the weekly time frame here, we broke this high, so price broke this high, right? Made a new structure. So this is now our higher high, right? And we identified that the move came from this low here. So that's our protected low. Now, as price began to pull back, we said, well, I don't care about what price is doing. My interest is, as long as price does not close below this low, I expect that price is going to come up and take out this high. Do you understand? So as long as price does not close below this low, the expectation is that price is going to come up and close above this high. Now, the moment price comes back and close above this high, well, this low is no longer the protected low. This low is now rubbish. It's no longer useful, because the only goal, or the only reason for this protected low is to hold price to come and take this high. Do you understand? If price comes from here and flushes down, it has accomplished what it wants to do, because this low has held price to come and grab the liquidity above here. So right now, if anything, right, the way the market is now, what happens is this now becomes my protected low. This zone no longer matters, because it has, in this particular case, it has given us an entry, and this one is no longer useful. So this is my protected low. And now if price continues to break down, now it can continue to go up. But the moment it begins to break down, I'm looking for buys to clear that high. So let's see what price does. Let's see, does it break down? Okay, it's not breaking down yet. It's still making highs. And then we begin to break down. So at this point here, right? At this point, well, this now becomes my liquidity target. Right? This high here becomes my liquidity target. essentially. Now I ask myself, where did this move come from? This is the last down move before the up move, and essentially came from this low here. Okay. It doesn't remember. So Suchinezo asked about what about the time frame from the monthly target. That's it. So this is the monthly low. It has been broken. So okay, no, this is the monthly low here. This is the weekly low. I can't be using the monthly low to trade the weekly targets. The higher time frame gives me context, but I trade when you're, so if, for example, imagine somebody is trying to, you try to buy here and then you try to hold on to the trade to this point. Yeah, it could get there. But within the time frame you're looking at, there's a structure that you're actually targeting, not essentially, oh, this is within each specific time frame. There's a structure and there's a liquidity target. Now, when those structure align with the higher time frame, that's where we get into positions where we could. Who remembers my trade on UG, where I was on those trades for a long time? That's because the overall direction I'm trading in the market aligns with that, right? So let me go back to the weekly time frame. So it's easier. So now I no longer care about this low that was here, right? Remember, there was this was where the protected low was before. But now, since price has taken out the liquidity that rests above this high, and now price is beginning to break down, this is now my new liquidity. Now, let me ask you a question. If price from here goes up and take out this high and begins to come down, would I be okay? So let me do this first. Right. So at this point, right, let's say I come onto my chart and I see this. At this point, right, I ask myself, where is the last demand? Where is the SND or the demand zone from which this move was formed? I'll say, okay, maybe I like this one. So this will be the only one I'll probably be interested in buying from. So let's keep this. Okay. So what it means is, if price comes to here, right, if price comes down. If price comes down here, I'll be interested in looking for opportunities to buy to take it up back to this. Remember, the target is this liquidity, right? Remember, there's also this monthly liquidity here, this monthly liquidity targets, right? So we were seeing how we're aligning them up, but this is the primary liquidity, okay? At least for this structure that we're looking at. If you're looking at the monthly and that's where you're doing your analysis, then that's the liquidity. But this is the structure we're looking at, and this is the liquidity here. That means this here is a protected low, and if it breaks below this protected low, then it means we're now shifting. So let's say price from here now begins to do something like this. If it breaks high, right, and it pulls back here, would I be interested in buying? Quickly. If we have the market do something like this, where it breaks the high and then pull back, would I be interested in buying this? So Chinedu says, no, now you're catching. Okay, because, well, it does not align anymore, because this area is no longer valid, because it's only valid based on the idea that as long as price has not closed above this high, and as price has not closed below this low, the target that I feel where price wants to go is for price to come and take out this liquidity. So if price comes here and stays for 10 years, anything he wants to do here, no problem. But all I'll be looking or anticipating is that price wants to take out this high. And if price takes out that high, oh, good and fine, we have a new structure. Otherwise, if price breaks below, then this whole structure is now negated. We'll look for an explanation of the what you call it, of the structure. Okay. Now, Simply Colin said other block is not mitigated. Well, I don't care about those things. I don't care about them in the way in the way that most people teach them. Okay, so structure is the key, right? I don't care about, so for example, there's leftover imbalance here, right? So what will happen is price continues to come down here. I'll look to buy because of this imbalance. It doesn't even work like that. It's all contextual based. If price comes here, I like this trade because of this imbalance. But if price, as it's pulling back, if it pulls back here, then I like to buy. However, if price breaks up and then pull back here, well, I'm not interested in buying. The context has changed. Do you understand? It's like saying, okay, I'll give you the expo to your exam. I'm going to give you the expo to an exam, and you have an exam to write next month, and you're like, okay. But then, and I'll give you the expo to the exam 2 weeks after you've written the exam. It's no longer useful. It doesn't make sense anymore. Do you understand? You now say, okay, because I have these new answers, I'll use it to write my next exam. Doesn't make sense. Okay. So let's see what price does. So remember, as I am now, there are two things I'm interested in. Either for price to pull back here and I look for confirmation to buy, or price maybe doesn't pull back, but then begins to break structure bullish. And then I could look for confirmation to buy as well. So let's see what happens. Price plays around, playing around, pulling back, let's see. So we're pulling back down, which is good. Okay, now we're breaking up again. So at this point in time, I go to a lower time frame. I might go to, so this is a weekly chart. Let me just go down to daily time frame. So now I'll look at this and say, okay, are we breaking structure on the day? Remember, I'm still waiting for this zone. I'm not waiting for this zone. I know that this zone could hold, but there's no guarantee. Price doesn't have to come back here. This is the reason why I don't sell into this zone, right? Because I know that price doesn't have to come back here. The price can just do this and go up. Okay, so I don't want to be caught on the wrong side of the market. So it's either as price begins to break up, I can now start looking for those buy opportunity. And so let's see what I'll do. So let's say I'm looking at this. I'll look at this and I'll say, okay, so we have this move. We broke down. We broke back up. We came from here. Okay, so we broke up and then we broke up. Not really. So if price were to come back into here, if price were to come back into this area like this, and like this, let's just keep this zone like this. If I were to come back into this area and I find confirmation, I'll be willing to buy. But now, let's say I'm willing to buy this market, right? From this zone. Remember, we had the overall analysis, but now I'm looking at this and I'm trying to buy. Where do you think my target will be? Here? Or here? Would it be on, would this be my target? So this high, 1, or this one, 2? Quickly, where do you think my targets will be? At least my primary targets. Obviously, I can allow my trades to continue to run. But where do you think my primary targets would be? Are you guys following me? Are we together? Can you guys hear me? Okay. 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 Well, someone said they are confused. I'm thinking. Okay. Well, remember, I'm not going to spend time on it so much anymore. Let's just quickly. Well, this would be my target here. Here would be the target. This here. This would be my target. If price were to give me confirmation, that's if price were to give me confirmation within this area, right? Because obviously this is I'm saying if price comes here, this is the target I'm going after. But I'm looking at I'm trading the internal structure. So first of all, this is my primary target. Now, also, what this means is where would be my stop loss just in case. Let's say I want to set a pending order. Would I, let's say halfway, set a pending buy? Would I put my stop loss down here because this is a protected low? No. Because I'm trading the inside structure, this would be, I'll probably do something like this. Right? So let's just say we set a pending order of something like this, halfway into the zone, and then we just wait. Right? But obviously, what I don't tend to trade like this. I always tend to look for confirmation. Okay. Okay, so let's say price continues to move. We continue to, let's see what price does. So at this point, so let me just pause. Now, at this point, let's say you were trading. Now, personally, for me, there probably would have been no trade here because I don't see any structural shifts. But let's say we're trading pin bar. Let's just keep it real like we were doing the last time. This would have been the trade we took. Our stop loss below this low. This would have been our first target. Obviously, we would be targeting even other higher highs, but definitely we'll be looking to take partial profits here. Okay? And in this case, it would have been a loss. Remember, we're trading the inside structure. But just because this one fails doesn't mean I begin to look for sells. Well, the answer is no, actually. I'm still waiting for this zone. because I understand that I don't have to win on my trade. The problem is most people approach the market as though they have to win every single time they place a trade, and that is the reason they lose. You understand? Okay, and then let's see, what does price do? Price, it doesn't come to our zone, but does it begin to make structural shifts to the upside? So we took a -1 here. Let's see, we took a -1 here. Let's push that out of the way. And so let's follow price. Okay, so if we break this high, I'll begin to look for highs, for buys. We don't break the high yet. Oh, so this is current live price. Very funny. Okay, so this is so on the weekly time frame, this is the zone I'm waiting for. Or if price comes here, I'll look to buy. Otherwise, now price is shifting structure, right? You don't own. Okay, so right now, if price breaks this high, right? If price breaks this high, we would have set in motion another bullish move, right? Would have set in motion another bullish move. Now, if I was trading this on the 4-hour, for instance, right? So this is there was some trade I sent. I don't know if I sent them out. No, I didn't send those trade out, but I discussed them in either one of our cutting edge trading room or weekly market outlook. So we had this. It's the reason I've been trying to buy gold, right? So we had this move waiting for price to pull back to this area. Price came close to it. I understand that price doesn't necessarily have to come back into it. But what I saw or begin to see is here, price begins to break higher. So we have this break of structure here. So we have our first, let me use this one. Okay, so this is where the first break of structure occurred on the 4-hour time frame, right? So we're bearish, and now we're breaking bullish, which is now lining up with the daily, lining up with the weekly, lining up with the monthly. Okay, so began to look for buy opportunity. Got involved in a very, very sweet trade. I got involved in a very sweet trade here, just inside here like this. That was what my trade looked like. That's what my trade looks like. I ended up closing a good portion of the trade. I took partial here, I took some partial here. It closed me out here when price came back down here, right? But we had this break. The reason I got into that trade is a different concept entirely. But essentially, I was looking for buys. I also got involved in another buy within here. But let's leave that for another time. But see what price does. So price makes a new. Where is my pen? So we have our low. We have a break of structure. And then we have our high. And I asked myself, where did this break come from? It came from here. So this is now going to be our protected low, right? So that's going to be my protected low. Protected low. And at this point, this was my liquidity targets. So this here was liquidity targets. Let's just call it liquidity targets. Okay. Now remember, all of this has not happened. And then I asked myself, where did this move come from? There were two zones that I identified. One was down here. Okay. And then the other one was here. And what did price do? Price came in here. Price came in here and gave me our entry. Now, if I go down to the 15-minute time frame here, and let's find that zone. Where are you? Okay, so that's it. So this is where we had to tap into it. I think I got involved on this one on that 5 minute or the 3 minutes time frame, but there was even Wyckoff accumulation here on the 1 minute time frame. Okay, and I got involved in the trade, and my target was obviously this high, right? So you see now, if price were to now come back down to this zone, would I be interested? So here's where people make mistake. If price were to now come back down to this zone, would I be interested in buying from it? Even though it might work, it doesn't make sense anymore. That's not valid because the only reason this area held is based on context. So at this time, when price broke this high, this became our protected low, right? And this, let's see. So we're looking at this on the one hour time frame. So that became our protected low. Okay, and let's see. And what the breakdown? So this would have become our liquidity targets. Let me see. So that have been our liquidity targets. Would have been expecting. I was actually expecting price to pull back down before breaking up, but what price did is it broke up. So this becomes liquidity targets, right? And then this protected low becomes this one, right? And so we're looking at this, price came here, it grabs the liquidity. So this now becomes our liquidity target, right? And this now becomes our protected low. But in this case, what happens? Price failed, it broke down. And price broke down. Remember, this is the 1 hour chart. Has it changed the raw context of why I'm looking for buys? No, it hasn't. But it means I'm not, there's no reason to buy this thing, to try and force buys on this thing. And yeah, if you want to try and sell, good for you. But I like to trade in the direction of the trend. So what this means is, well, this now becomes, from this break, this now becomes basically my protected high. So it's no longer protected low. But I'm not looking to trade this, right? What I'm going to be waiting for is for when price breaks bullish again, and then I look to buy. Okay, so let's call this protected high. And at the time, so when this break happened, there would have been liquidity targets here. Okay, so I'm going to update this. I'm not going to go through every single one of them, but this would have been the protected high. And then this would have been the liquidity targets, right? And you can see that, yeah, price came up to it, but price never closed above it, right? Price never closed above it, so it held. And we have a liquidity grab. And then this now becomes our protected high. Where did that come from? It came from here. And this would have been our target. Price grabs that, right? So this would have been targets, expecting maybe price to pull back and then look to sell off. But that didn't happen. Price just broke down. So would have this to be, so let's see, where's my brush? Okay, so would have this to be liquidity targets. This would have been the high that caused that break. And then price broke down again, came from this high, and then price began to break up. So we now had this, this move. So this is our break, and it came from this low. So we now shifted back bullish, right? Which is why I began to look for opportunities to buy, because all I want to do here is really buy. What I want to be is a buyer in the market, not a seller. Okay, so this will now become my protected low. And so at the time when price broke this area, there were targets up here. There was targets here. Now price has taken that target away. So this becomes my, where did it come from? It came from here. So this will become my protected low. Right? And where would my targets be? It would have been this high, and now price has broken. So this is now my protected low. And where's my target? Well, target is not yet defined because I want to see market begin to pull back. Price has not begun to pull back. So essentially, now there's more context into this, like the other fractal context. So 4 hour time frame, you dive between, so more MTFA that I teach, multi-time frame analysis, you're understanding where you are based on context. But right now, I'm bullish on gold. I've been bullish on gold. I took a long here. I took a buy here. I took another buy here, and I failed to get involved in a position here earlier today. Yeah, I wanted to get involved in a position. It was quite beautiful. Let me show you what it looks like. So on the, where's that? Yeah. So we began to, was it here? Was it here? No, it wasn't. Right. Yeah, it was here. So we began to, we're breaking, so the 1 minute time frame, we were breaking lower, and then we broke lower, then we broke higher. So I had a trade set up looking to buy around here and take it, stop loss below this low, and then take it to that higher time frame highs, which is here. And that would have been a very wonderful trade. So the trade would have been something like, let me see. So it would have been something like this. I was looking to get involved in a trade like so. Stop loss just below here. So stop loss would have been like 7 pips, and I'll just be going after this high here. So that would have been a 1:5 or thereabouts. let's think about 1:5 here. 1:5.5. So if you factor in spreads and commissions, let's say 1:4.5 or something like that. And yeah, that's it. So essentially, we're bullish. I'm bullish on gold. With the understanding that it doesn't have to do what I want it to. It doesn't have to do what I want to do when I want it to. Because now here's the thing, right? Remember, this is a weekly time frame. However, but if you look at the monthly time frame, there is even if we go back to the weekly time frame, Seth, right? On the weekly time frame, you'll see that we are in this range. So let me just clear all of this. On the weekly time frame, this is the range that we are in, from this low to this high. So that means price can do anything it wants to do here. I'm still looking for it to come and take this high, right? So if price, for instance, go up and then fails, would I say, oh, it doesn't work? I understand the context of where I am, right? And how I'm looking to trade this. But I understand that the market likes to trend. When it's trending in a particular direction, I look for opportunities in that direction because it gives you the opportunity of least, flowing in the direction of least resistance. And so if this holds, that might 1 hour trade could then lead on to become a daily structural move, to then become a weekly target, to then move up to the to the monthly time frame. That's basically how we look to do all of this. Okay, so that is a very, very intense breakdown of those trades. So let me just quickly jump into the pairs that you guys mentioned. I've talked about gold, so that's done. So let me just quickly. So gold, Collins, you asked for gold, so I've just been on gold. So let me take something from Chinedu. So Euro USD. Euro USD, Euro USD. EURUSD. Okay, so EURUSD, you don't need to stay what I'm looking at. So EURUSD, remember last year I was very, very bearish on this, and see what price has been doing. Okay. Now we broke bullish here, right? And then we stayed bullish. So this is the low that formed this high. And then we came to make a new low that formed this high, and then we made a new low that formed this high. And now where do you think we are? At a low. So this is, I made mention of the fact that some pairs are setting up for a very good trade. Now, my target is this high. This is my high. And the price is at an area that I'm interested in. As long as price does not close below this low on a weekly time frame, well, I'm interested in buying. So this here is my liquidity target. Right, where is it? So this here is my liquidity target. That's where the money is. Now, does that need to hold? No, it doesn't need to hold. On a monthly time frame, for instance, let's see what price is doing. So on the monthly time frame, price is actually quite bearish. We broke. Did we break bullish? Nope. Okay, so well, if that weekly low does not hold, well, then I'll stay away from the market. I wouldn't try to. If it doesn't hold, fine, it doesn't hold. So if the market closes, so as long as price does not close a week, it doesn't have to be this week. As long as price does not close below this low here on a weekly time frame, chances are price is going to want to come and take out this high. Now that could take 10 months, it could take 2 months, it could take 5 months, it could take 6 months, it could take 4 weeks. But if price begins to really break structure high, all I'll be interested in doing is look for opportunity to buy. So on whatever time frame I'm looking for, on whatever time frame I'm trading, all I'll be looking for is buying opportunity, because I know where the direct path of least resistance is for price. And guess what most people will be doing? Trading against it. Okay, so it's all contextual. Now, the moment price closes below this low here, a lot of people, instantly, I'm no longer looking for buys here. All I'll be doing aggressively is look for sales, because structure has shifted. Now, there's another explanation to that. But there's a good chance price will pull back and come back into some areas before then looking to go up, at least based on some higher time frame perspective. Okay. So let's see. So on Euro USD, we're bullish. We're waiting on the sideline because I'm not actively on this one. You see where price is now on the daily time frame. Here's where it begins to get interesting. On the daily time frame, this here is the protected high. Remember, we want to buy. However, the market is showing us bearishness. So I don't want to be forcing the market on, you know, most will happen. People don't want to trade a particular thing, but they're saying something else, but they're still trying to, you know, force, let's buy. It's supposed to go up. It's supposed to go up. No, that's not exactly what I'm looking to do here. Okay. So, so price begins to break. So what I'll be interested in here, as far as this particular move is concerned, is this is a protected high, at least for the bearish side. What I would like to see is, let me just push this to the side. What I'd like to see is for price to break above this high. If price were to break above this high, that now puts in a new higher high. And then this here becomes, or let me move this to the side. This here becomes our protected low. And then that high becomes our liquidity target. So if price makes a new high and then begins to pull back, what do you think I'm doing? Looking for opportunity to buy. Where do you think my target will be? Here. And I'll be looking for those moves. So what I want to see is for price to begin to do something like this. So you'll see me get aggressively involved, or you probably won't see me. I'm not the kind of person that I'm sure many of you have noticed. I don't send out signals. I don't believe in those things. I don't, because it's very subjective. You know, do I send you a signal on the 1 minute time frame that, you know, it doesn't make sense. I like how to understand the market. And then you can make up your mind about how you get involved. Because personally, I don't really want everybody jumping in at the same area I'm jumping in. It doesn't make sense. Doesn't make any sense, actually. We now become liquidity targets for the composite man. So, but you understand how the market moves, and then you decide on how you want to trade. Now, the concept I'm teaching you can apply it to any single thing, you know, any time frame. You have the idea, you want to line them up, you want to line up the context in the market from the lower time frame to the higher time frame, and trade using obviously proper risk management. Understand why you make losses, but just, you know, make the losses. There are good losses to be made in markets. If your rules are met, you execute the trade. It doesn't matter whether you're wrong or right. That's the point is that you follow your rules. So if we break this high on the daily time frame, we become very bullish, in my opinion, on what they call it, EU. Okay. You can begin to look for buying opportunities in the smaller time frame, but I wouldn't be doing that myself. You can definitely. So let's say we go down to the 15-minute time frame, because you'd see down the let's say on the 1 hour time frame. Say on the 1 hour time frame was still bearish because we came from this high here. So let's say on the 30 minutes, still bearish on the 15 minutes. Okay, we're beginning to shift. So we shifted here, and then we shifted here, and then we shifted here. So on the 15-minute time frame, this would be high break. So this would be protected low. That'll be our protected low on this particular 15-minute time frame. And then well, probably ask myself, where is the move coming from? What is the SNT? There's an imbalance here, so maybe here, and then maybe here. Okay, so you might, you know, if you're interested in that, you might look for buying opportunities within this zone, something like this. Obviously, target whatever high that is, or something like this. Maybe half, because this zone is too big, you might just target halfway, and like this. Now, I don't usually trade with pending orders. I want to see price get into my zone and then look for confirmation, because, well, what if price, you know, if price were to break down into or come into the area and doesn't react to it. So what I want to see is, I want to see price, let's say I'm looking at this area to buy from. I want to see price get here and confirm, and then I begin to buy. Now, the disadvantage of that is sometimes price comes and confirm and just moves away, and you don't get an entry, right? But that's fine by me. But in case where price just do this, you don't get involved in the trade, so you don't risk any capital. And then maybe look for confirmation, and then look to buy. Okay, but this is the 15-minute time frame. But in context, this 15-minute time frame is still subjected. You know, the daily. This is the high here that I want to see taken out. That protected high there on the daily time frame is the one I want to see taken out. And if that gets taken out, and then I become very bullish on this one. But for now, I'm not doing anything with this. But these are valid trades that you guys can look to take. If you're interested in that. Okay, that's EU. Let's see something. Euro Aussie, GBP, JPY. So let's look at Euro Aussie. So yeah, Euro Aussie. Let's see. Okay, so Euro Aussie. So Euro Aussie is bullish. Now, I'm working on something though. I'm going to probably have my own private channel. Although people would have to pay to join to be on my private channel. I would give trade ideas, and not necessarily trade ideas, but really insightful powerful training lessons. Probably give out some of my EAs and all. But you guys will have to pay. We'll see about that. I'm still working on this. Okay, so we're bullish on this one. Bullish. Okay, where is the move coming from? So what can I see here? We have this low from this high. So within this range, we're bullish. In the overall context, that is very bullish. So this is a bullish market in a bullish move, or in a bullish market in a bullish range that is bearish. So this is the range, right? The whole move is bullish. However, the current intermediate structure is bearish. So it's just the same thing right now. If I was looking at this, then probably go down. So I'll have this as my protected low, and this as my liquidity target. Okay. And then let's drop down to the 60 minutes. I want to see this bearish structure on the lower time frame. I want to see what price is doing. So price, let's see 4 hours. So 4 hour breakdown came from here, breakdown. So on the 4 hour time frame, this is the range that we're working with. And on the 1 hour time frame, okay, so breaking up. Okay, so on Euro Aussie, not the cleanest of markets. However, if anything, I want to buy. I would like to see this high get taken out. I'd like to see this high gets taken out. Let me call this supposed to be the protected low. So I like to see that high get taken out. But let me go back to the daily chart. Let me see if there's an SND area that we might want to get into. I don't see any unmitigated price action here, at least not on this time frame. I don't see any unmitigated price action. Everything seems to be except for maybe something like this. Okay. Okay, so if price comes down here, I'll probably look to buy or look to confirm to buy. Otherwise, probably wait for price to break this high and then look to buy. Yeah. Okay. What else? I did Euro Aussie from Chinedu. I did Euro USD from Chinedu. Okay, so let me go on to GBPCAD from, or let's do Euro GBP from Collins. Euro Collins. Okay. Let's see, Euro GBP. And this looks ugly. This looks ugly. Let's zoom out a little bit. Wow, this looks very, very ugly. Okay, so we broke down, bearish. We're coming from here. Did we break up? No, we didn't. We broke down. Yes, we did. So we broke down, then we're holding this low. I don't see much here. Seriously, I won't lie you. I don't see much to be done here. But if anything, price is looking like it's holding lows. Sorry. So so price makes a new break. This high needs to be taken out though. Although that high doesn't even mean much. That high doesn't even mean much. Let's see. Left to right. We came from here. Made this, we broke down, made this, we broke down, made this, go back, I made this, now we broke down again, and then we also held that area, so we've not broken up yet. We failed, so all of this is fixed structure. We are currently within this range, and this is a bearish range. This range here. I wouldn't do anything with this one really. I don't. But if anything, if the intermediate structure is looking quite bullish, so if anything, maybe look to target this high. But based on the available room to run and based on the overall context of the market, I probably wouldn't do anything with this one. I either want to wait for price to close above this high or wait for price to close below this low. So within here, I want to basically do nothing. Well, you can look for smaller time frame entries or stuff if that's something you really, really want to trade. Where are we again? I think one more. This class has taken quite long, but it's okay. GBPJPY, GBPCAD. So let me just quickly do those two. GBPJPY, just know that one is long. It's been long for a long time. Yeah, GBPJPY has been long forever. Let me clear this. Okay, so we've been bullish, we're still bullish. We are low. And that would be high. Targets. So it's about figuring how to get there. But internal structure is obviously bearish. This is 30-minute charts. I wanted to look at the 4-hour chart. So 4-hour chart is bearish. GBPJPY, wait for a break above this high, and then I'll look to buy. Let's see what your JPY is doing. Not doing anything. Okay. Okay, JPY. So yeah, I'll probably wait for a break above this high and look to buy. Otherwise, you can look to definitely if you're trading with a much smaller time frame, you can look to trade the inside structure. It's up to you. You can look to sell this market because now if we're selling, if we're looking for smaller time frame sales here, it's just that I don't necessarily trade that way. Then this here would be this here will be our protected high, and this will be our liquidity targets. Okay, so if price comes back up and we find confirmation, we can sell down here. Okay, but based on the overall context, I'd rather look for buy opportunity if it breaks above and look for this move. Okay. Okay, so GBPCAD on the GBPCAD, what are you doing? You're falling off the face of the earth. This is insane. Okay, so let's review this. Okay, so bullish. We've been very bullish. Where is it coming from? Let's see. Okay, so we came from this to this, and then we made this low, and then we broke up here. So let me see. Trend line. Okay, so this is where we came from, and we broke here. Okay, so then the move came from this low to this high. Am I correct? I think so. Okay, so we broke this high, and then we made this low, and then we made that high, and then we broke down bearish, and then came here and made this high, and then made this low, and then we made this high, and then we made this low. So we've broken up once, twice, and in an overall bullish market, we broke up twice. So we might be able to look for something like so. So this market is bearish. It's bullish long term. Broke down bearish just recently. However, context. Let's see. You know what? I'm sure there'll probably be some refined zone within here. What is happening? Is there any news? This is the daily charts. For daily chart to move this aggressively while we're live, that's insane. I don't like to try and catch a falling knife. This looks like a very big falling knife. But this here could be a very good. Let's see how today's candle ends. Right? Let's see how today's candles end. I think that's the key. The key is how today's candle end. This could be weak to strong hand transfer, manipulation of price. Basically, weak to strong hand transfer. I would induce traders to get involved because this is aggressive. And let me see what USD CAD is doing. This one pained me. I tried to get involved in trades here, but wasn't able to catch the trade. And now the market, it's just fell off. Okay. No problem. That's fine. It's part of the game. GBPCAD cards. Okay. So just keep this in mind. GBPCAD, I would stay away from this one for today at least. Just wait and see how today's candle close. If we, so let me go down to the 4 hour time frame here. We're just looking. So let me go down to 1 hour time frame. Let's keep it at the daily charts. Here's what you watch for. Now, today's candle might end up, if it comes up and ends up becoming a bullish pin bar, then this could be a very good buy opportunity, right? But otherwise, if market close below this low here, so this here would be our protected low. If price closes below this low, do not try and buy this thing. If anything, maybe you probably look to sell, but based on the smaller time frame, because even though, let's say if price breaks below this low, that's my pen. If price breaks below this low, that states that that shows the market is now bearish. But it doesn't mean that price has to just keep going. You know, the market just needs to, because it has broken the low and is bearish, price will just keep falling. It can and very well could, but it could retrace before falling. Okay, but if the composite man, right, if the power that be wants to, if their money is positioned on the long side, we are most likely going to see this low here hold. And if it holds, we're going to see the markets push, and the targets will be this one. I'll keep this in mind. I would keep, where's my GBPCAD? GBPCAD. I would just check you. So tomorrow I would see how you end up closing. Just set the chat alarm here. Where's my, just set the chat alarm here and see how that was. Okay. Thank you very much, guys. I don't think I can go any further into this class. Good to have you up here. Hope you learned something new. If you're watching from YouTube, definitely make sure to leave a like if you enjoyed the video, and also subscribe as well. But for you guys here, it's a pleasure having you. You're the real MVPs. Okay.